Good evening. How's everybody doing out there today? It is Wednesday, August 3rd. Tonight's DTS educational event is what is consistent trading. This is, I'm going to call this an average presentation. I often grade my own presentations before I give them. Some I warn you may be a little boring. Usually the boring ones are important. This one is just kind of average. It's important, it's not boring, it's not thrilling. Naturally, if I didn't think they were very important topics, I wouldn't be talking about them. This also is kind of a hodgepodge of things a little bit. A couple of the slides in here are borrowed from other presentations, which is fine because they make a different point. You haven't seen them in probably a long time. Unless you just study that free stuff page and you're there all the time, then you may recognize them, but they're here for a different point tonight. And this title was actually used a couple of years ago, but I noticed when I was kind of indexing the free stuff page that this never made it to the free stuff page. I don't know what happened. Maybe the recording got destroyed, or I'm not sure. So this will make it out to the free stuff page. By the way, if there's always, we just have a lot of people joining GTS as free members over this year. I don't know what's going on, but just tons of people finding DTS. If you are like new this last month, let's say, if you're new in July, if you wouldn't mind, just drop me a line. Here's my email. Just say hi and tell me, why you're here or how you found me or what's going on. Say hi. Let me know if there's anything special I can do for you. And if you are new, hopefully, however you got here, hopefully through whatever emails you receive welcoming you, you found and saw the free stuff page where if you don't like anything else that's going on here tonight, I do suggest that you stop by and visit the free stuff page. I call it the greatest source of useful free information for traders anywhere on the internet. And that's quite a boast since there's a lot of stuff out there in the financial industry. And certainly there are bigger sites, but they're just kind of blah, blah, garbage stuff. So with all that, let's get going for tonight. This is the little intro that you had on your email, so I'm not going to read that. I haven't had a hard time understanding it myself. Here's what we're into tonight. And I have to tell you, the only thing I don't like about tonight is it's a little bit of a hodgepodge of information, and I'm just going to admit to you right now, I'm not thrilled with the flow of it, and we don't really get to the conclusion for 19 slides. But along the way, even if you're a little lost, it's all good information. So I'm good with it, so I'm going to go with it. I don't have a choice at this point anyhow. How would you define consistent trading? Let me just throw that out there to all of you first and just get some ideas flowing. How would you define consistent trading? List some things that you would consider to be consistent with trading consistently. I'm not sure that's worded that great, but what does consistent trading mean to you? Because that is the topic for tonight. And maybe it's an easy question. Maybe I'm just kind of stupid. Following your trading plan, okay. What if that loses you money day after day after day? Week after week, nothing. Okay, two of the same answers. Anybody else out there more original? Consistent trading. Not taking rogue trades. So consistency is not being inconsistent. Analyze and change, okay. All right, there's some good answers out there. Let me kind of hit all around it. Here's some comments that I hear sometimes that, make me wonder. And a lot of you typing answers, of course, are pretty experienced traders, so you kind of know where I'm going with some of this. Here's what I hear a lot of times. This is not a joke. These are real comments that I have. Paul, we were in the trading room. Paul, we were bored yesterday, and today there were 3 trades in 30 minutes. Can't you space them out better? That's a real comment, by the way. I took a day off yesterday and made the whole week's goal. Can't you spread that out so it doesn't matter if you miss a day? It's as if like it's a carnival or something and I'm giving out prizes or something like that. So is that consistency to make the same amount every day? That's kind of one of the focuses I want to get at. Before I get there, let me kind of hit on some kind of shotgunning around some topics here that may or may not be relevant, or, well, that I think are relevant, but let's look at how. Sally sends her trading summary for the day. Here's Sally's trading summary for the day. Trade 1, $200. Trade 2, $150. Trade 3, $50. Trade 4, $50. Trade 5, lost $500. Total, negative $50 for the day. Any advice for Sally? The first few slides I'm asking a lot of questions, and then after that you can go to sleep and just pretend you're sitting there. Any advice for Sally? Don't every day don't take your 5th trade. Is it the 5th trade or your last trade? Don't take your last trade. But then isn't the next to last trade your last trade? Tighten stop losses. Okay, let's examine that in a minute. Hold your winners and cut. Oh, there's a Daniel. That's kind of like saying that to make money trading, you should buy low and sell high, right? Hold your winners and cut your losers. How do you do that, though? Now, how do you know Sally didn't do that, by the way? How do you know Sally didn't do that? Quit while you're ahead? Okay. What else we got? Sally. Sally is silly. What if somebody said, watch that bad loser, whatever. What if Sally, somebody do the math for me here. What if Sally would have limited her losses? Let's just say she had somebody sitting behind her and would have limited her losses to negative $100. How much money would Sally have made that day if she had a loss limit enforced of negative $100? This is a real question. Answer may not be as easy as you think. Who's good at math? Got a calculator? That's the Jeopardy music in case I don't have a very good musical voice. The answer is you absolutely cannot tell. We have no idea. It's kind of a very simplistic view to say that she would have made money that day, because what if, in order to make that $200, what if she was down $150 first? What if she was down $150 first? Her risk level isn't consistent. Well, we're not even sure of that, right? And good one, Robert. But what if the first trade was down 150 before she made 200? What if the second trade was down 150 before she made 150? What if they were all down 150 before she made this money? You changing her loss limit to negative 100 would have made her negative 500 for the day. That's not an improvement. Does everybody agree that that could have happened if you changed her loss limit? Correct? By simply saying it's negative 100, she may have had all $100 stop losses. We don't know. Also, maybe her risk amount is $500 and she didn't do anything necessarily wrong. So the first little point here is that trade analysis is not often as easy as it looks. I hear people giving all kinds of comments about trade records when you really don't know. It's a much more in-depth process to go through and to analyze what did each of those trades need, or in general, what does your trading need in order to make it successful. For some people, maybe she should have been letting anything go to a $300 loss before she knocked it off, because maybe those all came back to be winners. It depends on her trading style, how she enters, that kind of thing. But you just don't know. We don't have any advice for her, because without seeing the trades, you can't say anything about that at all. Any advice you have may actually hurt her. Perhaps that was the best she could have done that day. Maybe she didn't have the best trades, and that's all that she had in terms of winners, and that she had one loss in there. Let's look at this from another point of view. When you start trading, maybe in an early point in your career, you have a $50 risk, and you go through the day, and because you have the low risk and because you're new and you're brash, you just go out there and you trade really well, and you make a 4-hour trade, a 3-hour trade, a 1-hour trade, you're up 200, 150, 50, 50. What a great day going. And then the last one, you just don't want to get out of it, right? Anybody ever been there before? Give back some of your profit, you get a little stubborn, you say no, it'll come back, and then you give back your whole day, right? That's happened to everybody, I'm sure. So then you end up with a $50 loss for the day, even though you're up the whole day, right? Because you're just stubborn about that one trade. And that's a result of not properly handling stops. If you have a $50 risk and you took a 10x loss, that's bad trading in anybody's book, right? I mean, there's a lot of stuff that I do different and to justify things, but that's just out of the ballpark, right? A 10 time what you're supposed to loss, that's just bad. But here's what's funny sometimes when people get better. Good trader. See if this rings a bell with anybody. We're at a $500 risk now, 10 times that amount, but here's the record for the day. Well, we had kind of a small winner in there for some reason. Another small winner. A couple more really small winners. And now we took just an appropriate loss. But do those two columns look similar to you? Has anybody experienced this in the past, currently? In other words, your trading kind of doesn't change because you, instead of risking a small amount and taking a large loss, you're risking more, but you're taking little tiny profits. Anybody seen this happen to them? taking small profits along the way, and then one normal loss wipes out. In other words, you're kind of doing the same thing on both sides of the equation. There's an equal evil on both sides here, and neither one of these are going to make you money. You can brag all you want about following your stops here, because you did. You're 500 risk, you only took one loss. But if you are so quick to take your targets, now from one day we can't tell. It's possible maybe that was the best you could have done. Maybe just things weren't moving your way, and you were thrilled to get out of the day with the break-even type of day. But what if these $50 winners could have been $1,200 winners, but you just didn't handle them right? That's something that naturally you have to look at. No one likes giving back profit. I hate it. Nobody likes giving back profit. But here's a statement that you have to accept, agree to, or figure it out for yourself if you don't believe me. Taken to the extreme, though, if someone who doesn't like giving back profit, it guarantees failure. If you are good, it guarantees break-even results. Because you can't constantly be protecting every penny of profit and then also expect to make any kind of realistic gains. And this latter sin that I'm talking about is probably one of the bigger killers for traders, because people usually eventually learn how to read charts and how to trade a little bit, but then they get this psychological problem where they're always trying to lock in these little gains. We're slowly working our way into this. Here's the next one for you. What do we think about this 2 days worth of trading? And remember here, the risk amount is $500. They're telling you that. And the topic is consistency. Give me some comments here on these 2 days trading, Monday or Tuesday. Which is better? Which do you like better? Which is more consistent? Which is the sign of a good trader? Monday, plus 200, plus 150, plus 50, plus 100, minus plus 300. Both days we end up plus 300. This is what, slide 8? But we got there in very different ways. Loss, 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 big gain, loss. Any opinion on which would you consider to be more consistent, or use the word better if you want? Maybe you don't like the word consistent. Is either one of these the sign of a better trader or a more consistent trader? The topic here is consistency. Tuesday is a sign of a better trader. Would you consider any one of these to be more consistent? I see a lot of people typing, just waiting for those people to type. Well, let me jump to a couple points here so I don't lose you. Where I'm eventually going with this is that consistency has nothing to do with day-to-day equal gains, trade-to-trade equal gains. It's not what it's about at all. What is consistent is people trading consistent within the way they trade, within their rules, within their setups, within their plan. Either one of these could be very consistent. Again, we don't really know because we don't know what kind of a style this trader has. It is, as far as liking, I would tend to think typically the Tuesday trader is a better trader. Why do I say that? Well, they followed all their stops, they took their stops, and they had a big winning trade. Typically, good traders can get big winning trades. The problem with the left side, and again, I'm just making some general conclusions from not a lot of information here, but a lot of times the Monday type trader will never do better than that. Because they just never will get a decent gain in there anywhere. It's always going to be little tiny gains on a good day and then little tiny losses on a bad day, and they end up at zero all the time. So Tuesday, my point of it is, and you guys gave me a surprising answer. I thought it was kind of leading you to the trick answer that Monday's better because all the trades are right in a tight range. But we don't want a tight range. It's not what we want at all. As a matter of fact, we actually want the winning trades to stick out there and be nice winning trades. And taking a $500 loss, if that's your loss limit, it didn't work. In my experience, actually, I wouldn't even say it's more consistent, Jack, because what I'm getting at here is that consistency is consistent with how you trade. In other words, trading the same way from day to day. It's very possible, and I even encourage a trading style that's kind of going for a big reward to risk. In other words, Jack, somebody could set up in a way that they're going for, a 5 times gain, 5 times what you risk gain. In order to do that, they're trying to sneak in areas that are harder to sneak in, and they're going to have more stop outs. And that's perfectly fine. What matters is if you're true to your style and you prove it makes money and you prove you know the setups. Doesn't matter if you have 1 in 3 winning trades, 1 in 4 winning trades. If you make those trades big enough, ta-da, you're making money. Most traders kind of favor the other way, But most traders also don't end up being successful, so you got to keep that in mind. One more slide like this with some questions for you, and then you can fall asleep for a little bit if you like. What do you think about Monday's management? I just changed Monday a little bit from what it was before. What do you think about Monday's management? We have a $500 risk. What do we think about Monday's management? Boy, interesting comment. You know, some other slides you guys gave me answers that were surprisingly brilliant, I thought. You know, I try to sort of lead you down the wrong path all the time and nobody fell for it. And now on this slide, everybody is really very frightening. Well, you may not like this one either, but this is perhaps one of the most important, to me, one of the most important things I learned a long time ago. Monday is not necessarily bad at all. It's not necessarily bad at all. He has a $500 risk amount, but again, we're not really sure if he's following his rules. In other words, his risk amount may be his risk amount, but perhaps he has built into his plan a method to bend that at times to a certain amount. In other words, same question here. What if you looked inside these trades and you found that the $2,300 trade was down $600, right? What if this was down $600? By following his stops to the letter, he would have lost way more money, right? Because that $2,300 gain would be a $500 loss. So by what I would call managing his stops, he succeeded to pull a big, nice trading day. So he gave up a little more loss on the losses. Now this is if you're new, you got to be careful about this topic because it is in no way to say that you don't follow stops. You always have to have a stop in mind. But one of the most important things that I do and I teach that makes more money than anything else is understanding how to properly use stops. One of my favorite things to say, because it's true, is that a lot of new traders go out of business because they don't follow stops. And a lot of experienced traders go out of business eventually because they do follow their stops, but really follow them incorrectly. So I'm even pushing to the point to saying that I don't feel Monday is inconsistent because, again, we don't know his trading style or his rules. And that's the whole bottom line we're getting to here is consistency is your ability to read a chart, have a plan, and do that consistently. You prove you make money, you do what you do consistently. It doesn't matter what anyone else thinks about what you do if you know what you do and you prove that it makes money. As long as you don't have what I call a black swan possibility. And that would be the case if you told me, well, I'm just not going to use stops at all. And look, I made money last week. Okay, but you'll be out of business someday because you just haven't run into that problem yet. Let's say I had a Gurus stand for a second. I disagree with that, Ray. It's kind of a higher level topic, but just on the surface of it, I disagree with that. I think you have to use stops and follow stops, but there's a process to use them that I think can make you more money than blindly following something to the penny. It's a kind of a long, complicated topic. It's one of the things I do teach, and to me, it's one of the more important things to lose because if you look at it, I think it's an absolute fact, right? When you look at some studies that are done, that a lot of traders go out of business from following stops in a fearful way. Now, again, don't get me wrong. Have to have a stop in place somewhere, hard stop somewhere. But depending on setups, depending on what happens, there are different ways to handle things. And it's actually proven to me to be one of the most profitable things out there to understand how to do that. Well, even that, Ray, I'm going to take issue with that a little bit too, because it can't be a totally subjective thing either, where you're just simply saying, well, you know, I'm just going to, so it's a combination. You're right. You have to make a determination when and how to do this, but then you also still have to be following rules. My point is there can be rules set up that allow you to properly and legally bend a stop. That's my point. So even here, I don't consider this to be, so every slide I'm showing you, I guess the bottom line is that none of these are necessarily inconsistent trading if this person is following what he does and it's proven that this is what makes money for him, he reads the chart properly. As far as day today, let's go on to this next mini topic inside of here. I have said for a long time myself, a lot of good traders, I think this is a very typical thing that as a day trader, of course, this would not apply to longer term because longer term you're not taking profits every day. But as a day trader, I find the typical week looks like this: a couple of small winning or losing days, a nice big winning day, a nice winning day, and a losing day. This is kind of a typical week, I think, for the average person. There's a day you just don't get it right. Nothing quite goes your way. There's always a little luck involved in trading. You cannot tell me there's not. That's a ridiculous comment to say there's not. You eventually decide to put your stop to a penny. It gets taken out by a penny and then goes on to be the trade of the week, and you're out of it for a penny. You can't avoid that sometimes. And the other way around as well. Sometimes you get sucked into a trade by a penny and it stops you out. There's some luck involved. But basically speaking, you're going to have a losing day typically, and you're going to have a couple of decent winning days. And then you're going to have these days that are just kind of these break-even days. I call them McDonald's days, where you make a little, you lose a little, who cares? And out of all 5 of these days, what do you think, in my view, is the day that causes people, well, let me give you in the beginning. In the beginning, new traders, their losing day is the one that kills them, right? Because they have some good days that wipe it all one day. But once traders become better, what is the problem of these 5 days? What is the day that causes the problem eventually? What causes the problem? That's true, Mike. Typically, if you set one of your best winning days, you follow with a big losing day. Yeah, the problem for people are the McDonald's days. That's why it's called that. I mean, once in the beginning, Mark, yeah, in the beginning, people, they have big losing days, right? But then that gets painful and you learn not to do that. And I think everybody has some bigger winning days. The problem is when you have a day where you just didn't hit it right, you don't have the setups you want, and you're just kind of floating a break even. I think a big thing to do is just accept today is just going to be a little tiny winning or losing day. Who cares? Come back tomorrow. So many people try and take what I call that McDonald's day and force it to be a good day because you're frustrated. Does that make sense, everybody? I mean, can you relate to that? I think that is the death of most traders, is to not accept a McDonald's day as being a McDonald's day, right? Even bad traders, they have good days. Even so-so traders, they have some nice winning days. I mean, I rarely see a trader that just has it wrong every day. That's rarely the case. They're kind of erratic, and they have a nice winning day, and then they have a losing day, and that's fine. But then they have all these days where they should have just quit, and they keep pushing the trigger, pushing. They end up with a big losing day where they shouldn't have had one at all, right? Where they shouldn't have had one at all. One of my little sayings is, and this actually went around a while ago as one of the DTS quick tips, they're called. And if you weren't around to get the quick tip in your email, they are accumulated on the free stuff page down at the bottom. But one of my quick tips is probably something you would never hear a professional trader teach. But I teach things, I think, a lot differently than people do. And my tip is this. It goes, it's okay to lose on a day when you have strong conviction and you see your setups. It's okay if you lose money. It's even okay if you lose more money than you're comfortable with. That's kind of a bold statement, isn't it? I'm telling you, it's okay to lose money, even a little more than you want, on a day where you have your setups on conviction. But it's a sin to lose anything more than a little bit of money when you're trading and you're clueless that day. What do you think of that comment? I think you all agree it's a sin to lose more than just a little bit of money when you're clueless, right? There's some days you just don't have the setups. You look at the market, you're not sure what's going on, you're shaking your head. Try a trade, that's fine, but then don't lose a lot those days. I think everybody agrees with that. But what about the comment that I'm saying it's okay to lose even a little more than you're comfortable with if you like the day and you just had it wrong? Why is that okay? I don't think I've ever heard anybody else say that. Why is that okay? Or why do I think it's okay? You may not agree. You don't have to agree. Well, I think my point is in saying that it's okay to lose money even a little more than you want to. If you have, it's because to make money, you have to be a little aggressive. You have to get in there and push the button. And there's some days you're going to have it wrong occasionally. You just can't help that. But if you don't aggressively go after the trades when you have the setups and you have everything you want, you're never going to make money. In other words, you can't always be so cautious that on your best setup, best day, everything's perfect, you make a little bit of money. You understand what I'm saying? We all have our risk amounts. I'm not saying that you bend that. I'm just saying that you have to be appropriately aggressive. And if you're being appropriately aggressive on a day when everything is perfect to you and you are just wrong, you're going to lose, right? That's okay to lose that way. As long as you're a skilled trader, you know what your setups are, you clearly can define, and you can look back and you can say, you know what, that was just one of those days, I had it wrong. This week is kind of a good example for talking about what I'm saying, because I didn't really love Monday, and I broke even. Yesterday, I liked the setups, and I traded pretty aggressively, had a really good day. Today was one of those days where I liked the setups, I thought I had it, and I was dead wrong today. I gave back all of yesterday. Now, the setup today that did it to me is something that only happens once every couple months. We kind of out of nowhere had what I call a power trend day up. And I said at the open today, this day could go either way. We're kind of stuck. I call it between a rock and a hard place. We're kind of stuck at yesterday's high. We gapped above yesterday's base. Kind of in the middle of nowhere. I kind of thought when we hit yesterday's high, we'd be selling off. I went kind of aggressively short. Liked the setup. No regrets. The day just went higher the entire day. So I ended up giving back yesterday, 100%. I don't have any problem with that because I just had it wrong today. That type of setup where that happens, to me, that's like once. I'm not saying I only lose once every 2 months, but it's only every 2 months that I just have a firm opinion. And boy, the whole thing was just wrong. Now, from trade to trade, you're wrong, that type of thing. But I had a good conviction about today on the wrong side of it. I had some long stuff lined up. One of them, I just missed the entry. I had the entry. It would have made 3 days goal, but I just didn't hit the button. I was a little shy on it. And I was a little blank this morning. There were 2 gaps I should have been looking at harder that I wasn't really focused on. So I missed it today, but that's okay. I have absolutely no problem with that because if I didn't have that conviction, then on other nice winning days like yesterday, I wouldn't have had the nice winning days because I'd be sitting back saying, oh, gee, take it easy, I'm not sure. But you can't follow what I'm saying unless you're somewhat of a skilled trader and can define some of these things that I'm talking about. Speaking of that, what a segue. The only way trade outcomes would be same or if every day would be the same, is if every trading day, every stock, every forex, every futures setup was exactly the same. But they are not. Everyone is like a fingerprint. Every trade, every day is like a fingerprint. They're never the same. So you can't possibly say that your trading results should be the same from trade to trade or day to day because every day offers unique opportunities. And those opportunities, by the way, are going to be different in everyone's view. In other words, there are a couple people in the room today that killed it. They had a good, some of the people in my room are independent traders. And they kind of went on the long side today. A couple of them had really great days on it. Everybody's different what they look at. Well, and that's why some days at the end of the day, you may talk to one trader who said, oh, what a terrible day it was. The other trader says, what an easy day it was. Well, easy or hard is just in the eye of the beholder. When your trades work, it's an easy day. When your trades don't work, it's a tough day. I don't always look at it that way. I don't think it was a tough day. I just had it wrong today. Some days I'd call it tough. Some days I'd say, man, I just got nicked out of this, nicked out of that. Today I had it wrong. One of the biggest trading demons is requiring the always different market to conform to what we expect. You cannot force a good day when the setups are not there. Are the setups really that different from day to day? Absolutely. Absolutely. Yeah, Mike, I hate trending down days. I'm better with trending up days. I have a tough time with, especially when they come out of nowhere. And to me, that happens every 2 months or so when you get that power trend day up like that. You're too late to go long. I'm always feeling I'm too late to go long on those days. And then you can't short. I mean, if you try to short, you lose because the day never reverses at all. So luckily, they don't happen a whole lot. Absolutely. What are we doing next year? But deciding when the setups are there. Now, I keep referring to when the setups are there, when the setups are there. And you're probably thinking, okay, what the heck is the setup? Tell me what the setup is. Well, you can only be so objective. In other words, what I think great setups are may not be to somebody else. Now, anybody who is trained by me, we'd probably all generally agree what good and bad setups are, but even then that doesn't mean we have the same favorites. I know a lot of different strategies, a ton of them, and I have only several of those that I trade, and just 2, 3, 4 of those that are my absolute favorites. So we can all agree on what works or doesn't work, but we all have our favorites based on a whole lot of things. You can only be so objective. There's always some subjectivity in trading as much as you need to make it as objective as possible. So we need to try and erase as much as we can that subjectivity, but you can never do it. Technical analysis is objective. Isn't that the whole idea? Well, it's not totally. New traders come to the market 100% subjective, thinking, that stock, it can't go higher, it can't go lower. Gee, that was really good news, it ought to go higher. They're totally subjective. The goal is to become as objective as possible. But there's always some subjectivity. It's what makes the market a market. Let me prove that to you in a couple of different ways. Let me just quickly ask you guys. if you've been trading at all, whether you're long-term or short-term, just generally speaking, if you categorize your type of strategies into things that are kind of, I'm going to put a number one, breakout type of trades, or number two, some type of pullback type of trade. If you don't even know what I mean, then then don't worry about it. What do you prefer? Just throw out there, one or two, breakout or pullback, just to make my point. Or you could use abbreviations, even though I gave you numbers, just to be difficult if you want. That's fine too. What do you guys like? Typically, a newer group will be split 50-50 on this. I happen to, well, you guys aren't making, my point was supposed to be that you guys are going to be very split because this is somewhat subjective, but you guys are all, well, a lot of you answering also have probably been around me for a while. I prefer pullback most of the time. Occasionally there's a breakout type of thing, but most newer traders actually do prefer breakout type of things because they feel that there's less chance of it coming back or that there's room to go or whatever their theory is. Let me ask you this one then. Oh, that's supposed to be a 2-minute chart, not a 25. But between what do you like taking your strategy on? A 1, a 2, a 5, a 15, a 60, or a daily chart? Where do you like getting your strategies? Go ahead. 1, 2, 5, 15, 60, D. Where do you like getting your strategies? 5 and 15, daily, 5. There's some 1s and 2s out there. Come on. 60. Yeah. See. So no matter how you're trained, you're going to have a personal preference, so to speak, about where you like to kind of zoom in and find your stuff, right? What do you like best? Number one, first half hour, if you're day trading. 2, 30 to 90 minutes. After 30, before 90. 3, lunch. That's a 3 lunch. Or 4, afternoon. 1, 2, 2, 1 and 2, first 90, okay, 2. So most people are morning type people. There's nothing wrong with trading lunch or afternoon. I happen to like the first 90 myself. That's probably where we're getting most answers that way. Here's one for you though, that really doesn't matter who you like or how you're trained or whatever. Would you rather go for a home run and have to take the trade 2 or 3 times to get it right? Or would you rather go for a small profit play it once and win more often? So number one, you like the home run, even if it's 3 tries. Number 2, you like small winners, few stops. What do you like, 1 or 2? Here you would be pretty split. Yeah, but in a vacuum, Mike, what would you prefer to look for? I know when you look, you're going to see, I agree, you're going to see things that could go one way or the other, but just on a normal day, if you're going to set out, what would you prefer to do? 1. People are fairly split on this one to some degree. It is, doing number 1, the home run, requires a lot more confidence because very simply, you have to take the money when you get a home run. You know, that's what it is. And that's why for some traders, they kind of favor, you know, the small profit type of thing. It's good, you just got to keep up a very good batting average. So again, it kind of depends. So there's a lot of variety here in what people like, right? Well, it's kind of where I am, Mike. I mean, I kind of like to get a little bread and butter and then go for a home run here and there when it sets up right. But just mentally, I was just wondering. So here's another one for you too. I'm going to try and do this very quickly. And I did this in a presentation not that long ago, maybe 6 months ago, 9 months ago. But here's the ultimate proof that trading is subjective to some degree. You can't argue with it. I'm going to prove it to you right now. This is for you in the seminar program. I think this is actually in the home study course somewhere, but it's just showing the objectivity that can't always be there all the time. We try to be as objective as possible. Bullish or bearish, what's the big deal? If you guys want to vote very quickly here, I'm going to ask you, if you've traded even one day, you know what a candlestick is. Which candle is more bullish, 1 or 2? Now just for practice, go ahead. This should be pretty simple here. 1 or 2, which candle is more bullish, 1 or 2? We're going to have 100% agreement on this. Nobody, unless they're joking around, would say the answer is anything but number 1, right? Okay. So let's go to the next slide. And this now here will be a little different. See the little bull come up there? That means number 1 was the correct answer there. So let's go to a different slide here. Which one is more bullish, number 1 or number 2? Now this could be a little tricky because number 2 is red, but what do you like, 1 or 2? What do you like for being the most bullish? Again, I think will be 100% consistency. Everyone will agree that number 2 is more bullish, even though it has that little sliver of red in there. Number 2 is more bullish. But here we go. Keep watching. I'm going to keep asking you. 1 or 2? Now, I've increased the red and the green. Which is more bullish, 1 or 2? 1 or 2? 1 or 2? Everybody's going to say 2, I guarantee you. 1 or 2? 1 or 2? 1 or 2? It's 2, 2, 2, 2, 2. All right. Here comes the next one. How about now? 1 or 2? Everybody's going to say 2 still. 2, 2, 2, 2, 2. 2, 2, 2, 2, 2. The winner, number 2. How about now? How about now? 1 or 2? You see where I'm going with this, of course. Yep, still 2. Still 2. Still 2. How about now? Yeah, starting to get unsure. How about now? 1 or 2? If you're not sure, put 1/2. Or 3. I guess 3 works. Oh, somebody switched over to 1. Mike says it's 1. Shandu says it's 1 or 2. Possibly in between. Mark's still with 2. Guess what? Look at how good I am. I predicted, because these slides obviously are done ahead of me, I predicted that you guys would be torn right there, right? Right there. Now, how can that be? If the market is objective, how can 50-some traders look at the same slide and be torn down the middle, whether or not it's bullish or bearish? One candle, right? Do you see my point, everybody? So you take a whole chart, you take a stock with multiple charts, right? And naturally, there's other things you would look at, but I'm just saying if you have to look in a vacuum, which is more bullish, we can't agree. Isn't that kind of scary to you? We can't agree which is more bullish, and I agree. I don't know either at some point. And then you can say, well, Paul, look at other things, but guess what? I could show you other charts then and do the same type of thing, just rearrange the chart a little bit, and pretty soon we'd be going from bullish to, I don't know, right? Now, obviously, somewhere in here you have to cross, because if we're starting with clearly more bullish on the right, and we're going to end up with clearly more bullish on the left, right? Somewhere there's a crossover point, but where it is, we don't know. That's why there's some subjectivity. That's why to the victor go the spoils, just how well you can read. And that's why, to me, it's so important that technical analysis is just one of the 3 things you do, really. I talk about the 3-legged stool a lot, and that's why sometimes what I like to find are these moment-in-time setups where I could take a short and somebody could say, Paul, I think it's long. And I go, I don't care. Doesn't matter to me. Because if I do this consistently, every time I trade, I'm going to make money. Because if I'm right, I'm going to make a lot of money. If I'm wrong, okay, I'm wrong. And sometimes I'm set up in a way that I don't even have a full loss if I'm wrong. So what are these setups that we're talking about? Well, they're your strategies. They are what you require to see in order to take a trade. There are many correct ways to trade. There are many incorrect ways to trade. Good trading is technically based, period. So as you know, for me, there's only one way to trade, and that's technically. You can't trade any other way. But there are many different ways you can trade properly. Now, certainly, you can be trained different ways to make money. And like I said, even people who are trained by me, they emerge doing unique things. In the room are many people that are trained by me. There are a few people that are 100% clones of me. I mean, they think exactly like I do. And throughout the day, we often take a little bit different trades. Sometimes they're the same. Sometimes I'm doing something that everyone likes. They do it. And sometimes I do something and somebody says, I like this a little better. And some days they may come out a little better. Some days I may come out a little better from the other real good people in the room. And that's perfectly fine. That's what it's supposed to be. And you continue to review and advance and become a great trader that way. In essence, you actually can reduce your setups and everything you do in trading to following a set of rules is what it really comes down to. So the bottom line here finally on slide 29 is what it's all about, is that consistency means only one thing in trading, consistency in following your rules. Rules in the broadest sense, including rules to identify setups, rules for entry, rules for stopping, rules to manage the target, rules for money management, rules on follow-up procedures. All these things are very, very important. Notice some of these that, I have rules for entry, rules for stopping, which implies it's not as simple in my book as just simply finding a number on a chart. In my case, entries are always separate from strategies. Strategies that a lot of you have maybe learned that have built-in entries I don't think work really. So I always break out and talk about managing entries and managing stops. Probably to me one of the best things that you can learn to do. The final rule is to follow your day. Yeah, I should put that on here. That's right. Rules. You need a rule to follow your rules. That's actually very true. Add to the prior statement, if you follow your rules, the only way that all trade outcomes would be the same is if every day would be the same, is if every trade in every stocks, they never are the same. This means that applying the same standards to trading means that some days you may have nothing to do and the next day you have more trades than your account allows you to take. That's just the way it is. You have to accept that. Just a quick reminder here to average, and I'm going to run through this with the trade real quick and show you what I mean. I just have one trade in here because I want to just take and run through and show you kind of what I mean by requiring things from your rules. 1 hour a day, from chart reader to trader investor. I think one of the more important videos you can watch from the free stuff page, which if you joined us late is right here. And I also asked anybody who joined late that if you are newer to DTS, I would just love to hear from you and hear why you're here, how you got here, because we've had an awful lot of new people joining up this last month or two. We've always had new people joining, but there's been just a lot coming in. A mentor of mine when I was young told me that good managers do routine things routinely in trading. Rules must be routine. Yeah, absolutely, Mike. One of the little articles I have out there, and I've never done a presentation about it, and I'm not sure it justifies a whole presentation, but it's that, the 4 parts to learning. Mike, you're probably familiar with that because if you said that statement, you must know it. I even have to think about it. But at first everybody is consciously incompetent, right? You're consciously incompetent. You don't know what you should be doing. Do I have this right? No, you're unconsciously incompetent. You're unconsciously incompetent. You don't even know what to do when you don't do it right, and you don't even know it's wrong, right? Then the first step is to become consciously incompetent. You're still a mess, but at least you know you're a mess. That's the first step, right? And then is to become consciously competent, where you have to think about every single move you make and constantly reinforce it. And this is that's the long part of the journey for everybody. You become consciously competent. And then that highest level is when, what you alluded to, is when you're unconsciously competent, where you just automatically know, you see the pictures, you follow your rules, there's nothing to think about, nothing to discuss, and you have that ultimate confidence level. That's the 4 steps that you go through. And I think it applies to trading as it does to most anything, including sports. Yeah, that's right, In the Zone. Good book. All right. Biggest issue, bar none, absolutely no question. Biggest issue to me is that few can tell you that they have their setup. How do I know this? Well, because this is what I do. I work with people, and few people can tell you what their setup is. They're always chasing things. They're always asking other people, oh, how did you get into that? Or what did you see? If you're asking somebody, what did you see? You're never going to make it. I mean, what could somebody say to you after learning how to trade and being successful and taking some good trades? What could they say in one line as an answer? I mean, that's the problem people have, is they think that there's like some one-line answer. How did you become a great doctor? How did you do brain surgery? Oh, well, here's the answer. I'm going to write it down for you. I mean, it's not that way. It's something that you learn. What is a setup? It varies for all. 2 traders who have equal and excellent chart knowledge will have different setups, different favorite patterns that set up every day. I know a lot of setups, most I don't use. I have a small list of setups that I can use, and I have a handful of favorites that are my go-to setups. It all depends on the quality of the particular setup. Remember, every setup is different. The math, the market timing, the relative strength, the weakness, all those things that I look at to make a final determination if it is good to go. So what I like to do here with 10 minutes left is just kind of run through the mental process for some of you. Now, if you're in the trading room, you'll be bored with this. You can leave now. Paul, you taught me something great 12 years ago. You said all of you will fail at trading if you don't. Yeah, I say that a lot. Yeah, still do. Thanks, Mike. Well, one of the things, the advantage I have is working with so many people. A lot of times, Mike, I ask people, like I think I told you here, a little breakaway story. Somebody emailed me the other day, and it wasn't a student of mine. It was just somebody who is a member of DTS I never ever heard from. And I did, Mike, like last week, right, I did quite a few educational articles where I sent out the stuff I sent to the room and whatever. And I never heard from this guy, and he just said, Paul, you never heard from me, but I get all your stuff. I look at it sometimes, but this was great. What you said is just fantastic. And then he said, I'm happy to report that the switch flipped for me last month. Now, being in my position, I know exactly what that means, right, Mike? You know what it means. The switch flipped one day for you. All of a sudden, It's like your head goes above the clouds, you're totally clear, you get it, you look back and you say, this wasn't that hard, what have I been doing? And I emailed back to him, and I always ask people when I hear that comment, yeah, people call it different things, the aha moment, the switch flipped, whatever it is. And I asked him, what was the thing? Now, I didn't hear back from him, but most people, when I ask them back, it's that I got mad not following my rules. I dug in my heels. I wrote a plan that I decided to follow, and just writing that plan is what's flipped it for me. Just actually taking the time, to actually say enough of this. I keep doing the wrong thing. The problem is people so many times get mad enough to follow the rules and perhaps make it, but they're mad because they lost so much money and they're done. And so many times there's somebody comes back a few years later and they created, they got money together for a new account, and now they're better because they don't do those stupid things because they got burned. So yeah, I mean, that is a big one, obviously. So let me just run through the process for me. And again, I'm not trying to teach you how to trade because, on this next few slides, because this is just one setup. This involves a lot of things I like. I call this kind of a bread and butter setup for me, but not understanding. Obviously, it should go without saying for anybody thinking that in my seminar program, I teach for 3 full days, and we're just teaching how to read a chart. So I can't possibly, in 6 minutes, even if I wanted to, teach you that information if you don't know it. But I want to show you the summary of it, the end analysis of how I think when I look at something. So again, I don't like to go back 52 years. I did these slides last night. I took a trade from yesterday. All right, LNG from yesterday, just an average trade. And let's just go through chart by chart how it comes to be for me. So this was the setup was taken yesterday, 9:32. Half the trade, a third of the trade taken around 10 o'clock, was entered first thing in the morning. 2/3 it went to close. I walked away, left it open all day, put an appropriate stop in, tried to get a home run, never became a home run. As a matter of fact, ironically, this is just a weird coincidence. The exits were exactly the same. And that is just a completely fluke coincidence. I didn't even know it until I was done. It just so happened late in the day, I decided to put a stop over 146.06. And look at that. It was the same as the first target was. Just a fluke coincidence. But anyways, so how does the trade get come to be? Well, LNG went out to everybody the night before in the room on one of my on the list I sent out, the watch list, and it was on the 60-minute list. Why is that on the 60-minute list? Because I saw this particular setup. I can't draw any lines, but pretend I'm drawing a line right here, right? So there's a little 60-minute consolidation that's been in an uptrend, kind of challenged the uptrend. This is the chart that caught my eye. Now, very important, again, me, the way I think, there is no way I would take this trade under the base. That's what the average trader would do. That's not going anywhere and is a high failure rate, right? Right, Mike? You know that. Never under that base. As a matter of fact, the way I teach, this is specifically not allowed to take this under the base. The type of setup, what is called, you never take that under the base. But what I would like to do the next day is it runs up back to the top of this base. I know this is a very high resistance area. So that's one of my favorite things. So the 60-minute chart is what caught my eye. Next chart I have to look at then is the daily chart. Oh, there's a little arrow for you. There we go. That's what it did that day. Now you look at this is the day I traded it, right? Before that, that's the setup going into the day. In other words, that's the chart I saw when I said, okay, I want to flag this chart, look at it. And then look, this is all it did this day. That's it. You know, one of the biggest things I preach is make your money from, can anybody fill in the blank? Make your money from what? Extravagant, crazy, once a year. Yeah. Make your money from ordinary moves, exactly. If you were to look at this chart the next day, you'd say, well, nobody made money from that. Yeah, it did. It made the whole day's goal just on the one trade. So the next trade I have to look at, I have to go to the daily chart and say, well, does the daily chart make sense to take that hourly chart? Now let's talk about the daily chart for me, because I'm going to give you an important kind of a teaching lesson in here, if you will. And that is the daily chart. Boy, I wish I had my little, I can't draw lines here. Is this daily chart okay? I mean, it went above this line, maybe went above that. I mean, where is the resistance here? I mean, we're falling. We broke 2 pivots. We broke this one. What is it about this chart that makes me say that's the right area? Does it matter if it broke this by $2? Does it matter if it broke this high over here? Does that matter to anybody? Does it matter if it broke this high? Could I have shorted this a little higher? Could it have been lower? It's a tough answer. I don't expect anybody to get this one because it's kind of a trick question. I see some typing. I'll get a drink of water. I think you'll like my answer. My answer is that I cannot tell from the daily chart where this would decide to roll over. I don't know. It does. People think it has to happen right at the prior high. Actually, many times in a pattern like this, the best time to short it is when it tries to break the prior high because that brings in selling. But you know what? I don't have to figure out the daily chart. You know why? Go back a chart. Go back one chart. Look at the reaction 2 days ago. It gapped down. There's your clue. And then when it gapped down, who still wants to buy this stock? Not a lot of people, right? So that's what tells me that the daily chart makes sense. So I don't need the daily chart. The strategy to me, and again, I'm just thinking out loud the way I go through this particular trade as a day trade. I'm not really trading the daily chart. I'm trading that new consolidation after that little tiny gap down. It's not a big deal, but it tells me a lot. It tells me that there weren't enough buyers to bring it back to where it was. So that's all you need to see from the daily because the hourly makes sense. Then we come to the 15. What do I need to see on the 15? Well, here's that prior day. This is the day it was traded on the 2nd. So what I want to see is I want to see it run up into that resistance. That's the way you take these. Notice what would I have made if I took it under the prior day's low? The typical trader style. I would have made bupkis. Nothing. Nada. Nunca. Nadie. Absolutely nothing. Matter of fact, I would have lost a little money. Shorting the top is the concept on this one. So it ran up and I shorted the top, the opening 2 minutes of the day. 15-minute chart, what's it there for? Trying to give me some area of wear. Now, another great thing that happened, and here's the 5-minute chart. What do I call this, everybody in the room? What do I call this opening? This is a reversal time. It's one of the best reversal times you can use. What do I call that? When I'm looking to short something, when it pops up into a resistance area. Well, it's not really the pop. It's kind of the pop, but again, and guys in the room, sometimes I use this kind of fun terms because it's not all seminar people. In the seminar program, we use more specific terms, but just kind of fun terms. No, I call it the stupid pop, right? The stupid pop. It's the stupid 5-minute pop, right? Oftentimes stocks, because of the way the market works, they will just have this dumb pop. So I don't know that's going to happen. When it opens down here, if it would have dropped, I never would have been in this trade. If it would have gone sideways. So it's on my screen along with a bunch of other stocks. This is not the only thing I'm looking at. I'm not sitting here praying, please go higher. What I'm saying is, hey, I know the setup. If it pops in the morning, I want to short it. And I'm looking at my charts. I got a bunch of thumbnails. Boom. Remember at one time, this topping tail was a green bar. It sticks out. Say, oh, there we go. So I want to short that now. As a matter of fact, I actually was very slow in getting there because on the next chart, you'll see the entry a little better. But I shorted there. And then, boom, you get that nice drop. And remember, that drop is just going to yesterday's low. That's all it is. Just a move that on the hourly chart, you wouldn't even think was worth trading. But that, with the precise entry, makes the day's goal. And I took half, and then I let half go to the end of the day. Now, I, of course, was hoping that I would get a diabolical drop from the daily chart. Didn't get it that day. No harm done. Hung on to it. But some days you walk back, you leave for a couple hours, you come back, and boom, this thing is falling like a rock. I didn't. This is not the best trade yesterday. The best trade actually was CAT. I didn't show it to you because it was a gap, and it was kind of a little, didn't have all the talking points that this does. So, like yesterday, I come back to CAT, and CAT's kind of a little home run when I walked away. This thing was okay, but it wasn't a home run. And then on the course, what do I need to see on the 1-minute chart? Well, if you're trading the opening minutes of the day, the 1-minute chart is something you have to have up. I don't trade the 1-minute chart in terms of my strategies because I like to hold on to stuff kind of all day. My strategies are coming from the 60-minute chart, as you saw. But the 1-minute, I'm giving my entry on this in this case. So the 1-minute chart is where I found my entry and also where I trailed out target 1. So there's the whole thought process, if you will, of a strategy and running through what it is and the way you need to think as a trader. To me, there's no subjectivity, if you will, in the way I think. Now, if you compare me to somebody else, somebody may say we're being subjective. Did that go up high enough? The only thing I regretted on this trade was I should have shorted way earlier. I just wasn't fast enough. I was just doing something else, looking somewhere else. By the time I got to this, got loaded up, boom, 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 that's where it was. So I found the best entry that I could. So to be consistent, learn what you're going to do. Start small and build confidence. Slowly increase risk size. Trade from confidence, not from fear. That line there is just a little blurb, but the more I think about it, the more that is the root of most traders' problems. Is just, well, I shouldn't say the more I think about it. I teach this all the time. To build confidence and don't trade from fear. Focus on maximizing winners, not minimizing losses. If you focus on minimizing losses, you will end up with a whole string of minimal losses because that's what you're trying to do. Naturally, you have to have the skill to read a chart to be able to tell when you can get a good winner, when you should be a little tighter with things. And that's something, I wrestle with every day. It's not always crystal clear. Like I said, there's some subjectivity involved. If you are newer, I already recommended that you see that prior video called From Chart Reader to Trader Investor. It's on the free stuff page, but it's on the Hall of Fame section. And another one in the Hall of Fame section is this one right here, the three-legged stool. I think this is a really important one. And it has to do with the fact that it's very important that you do gain superior technical understanding is how I phrased it. You're not going to get superior technical understanding reading dumb articles on the internet. I think most of you know that. Learn from a mentor somewhere. If you don't like me, that's fine, but learn from somebody who you can learn a style from. Don't hop around. There's different ways to make money, but you just got to focus on a way to do it. But get that superior technical understanding. But then a lot of traders have that, still don't put money in the bank because they don't understand some of the other issues. So psychology or experience or confidence, whatever you want to call it, and then math and probabilities is a big one to me. There's other topics I've done. You can listen to some of the prior events about math and probabilities, talking about the whole moment in time concept, talking about the fact that you don't have to be, you want to be a perfect chart reader, but in the final analysis, you don't even have to be. All you have to do is find those moments, because if you do it properly, if you manage properly, and you find those moments, you can be a great trader and have far less than really fantastic understanding of charts. And of course, a lot of people do is, I wish I had my marker, is that they may be at I'm just going to make up a number, they may be at a 90% technical understanding, which is phenomenal, right? And they're not making money. And what do, everybody? My last question I'm going to ask you. What do? They're not making money. That are a 90% technical level, what do? Well, yeah, they could do that, yeah. But if they're going to focus on something, Mark, what I was getting at, what they try to do is, no, they try to take the 90% level and make it 100. In other words, they keep focusing on the one leg of the stool that's already strong enough for them, right? But they don't really have a clue about math and probabilities, and also it could very well be that their psychology is killing them, and a lot of people don't even realize this because they don't follow up on what they do. They don't look at their trades. If you review your trades, there's so many times that, and I even have to say that more often than not, when I get trades from people that are struggling, it's not actually their initial chart reading that hurts them. They had trades that I'd say, this is okay, but look what you did. I mean, you had 3 trades in a row that ran $1, you took 13 cents, and the next 2 trades stopped and you lost for the day. So a lot of it, comes down to these other fuzzy issues that are just related to charts. And it's kind of common sense. What I'm saying obviously is true, because it only, again, don't be insulted, but it only takes a 5th grade education to understand chart reading. There's nothing complicated about it, right? So when you got to scratch your head and say, why do people struggle with it? Well, it's these other things to some degree. But you can learn it. It's not that hard to learn. A quick reminder for you, I don't remind you that often, if you are looking to day trade but you are not because of the $25,000 minimum requirement, first of all, I want to strongly suggest that you don't day trade if you don't have the money to afford. But if you have your money tied up in a house or an IRA or whatever and you want to day trade, there's a way you can do it without having that money through a prop program. You can email me and I will send you information about that. You need to put up $5,000 as a risk deposit, and then you can be trading in a couple of days. And you can do whatever you want. There's no levels or no tests you have to take or anything like that. And what else is there? Is that it? Visit the free stuff page. That's it. We reposted the calendars last night. Made a couple of differences because this presentation was backed up a week from last week, so we backed up the next couple for next month. And I believe that is it. Are there any questions? So-so is a misrepresentation. Well, I can take that either way, Mark. You have to be a little clearer. Either it was so bad that I inflated it by calling it so-so, or the other way would be a compliment. So, thumbs up. All right, thank you, sir. How much is trading a game of probabilities? Well, that's an excellent question, Ray. It's highly a game of probabilities. It's highly a game of probabilities. Ray, let me ask you with this question. Let me answer it this way. No, this is no. I have Ray. I've been doing this so long. I have an answer for everything. Is blackjack a game of probabilities? I think you're liking my answer. Ray, is blackjack a game of probabilities? Well, just in general. Skill. Well, my point is, Ray, if you're the house, if a friend of yours owned a casino and he gave you a table, like you own the table, you're the house, would you go there and deal the cards because you have the probabilities? I assume your answer would be yes, right? Blackjack's 52% chance for the house, right? 52% chance for the house. So I mean, to me, it's a similar question. I mean, what we're trying to do in trading, of course, is it certainly is probability because nothing's a certainty, right? There's no way I can start any day and say, well, I know these 3 trades are going to work. What I can say in some days is these are high odds trades. You know what I mean? These are high odds trades, right? And what we're trying to do, Ray, my point is that we're trying to be the house when we trade, is to say that any trade I take, I feel very good that I have the edge in this trade. You're never going to be sure. And you know, the analogy I always use, Ray, is if you did take over that table, if you had a table that your friend gave you and you know you have these 52% odds, that doesn't guarantee you're going to win. Why? Well, what if you know you can't be there all the time, right? So what if you hire a dealer? Well, what if you don't do a background check on the dealer? What if the dealer brings in his buddies? You see what I'm saying? In other words, you still have to do everything right to maintain your This is a great talk, isn't it? So you still have to do everything right, even when you find your probabilities. Even when you, in blackjack, if you own a table, you're given the probabilities because of the nature of the game. In trading, we have to learn the charts to get our probabilities. But even then, Ray, people screw it up because they hire a dealer without checking his background. And he cheats, he brings in friends, and the house loses because people are cheating, right? So you still have to do everything you're supposed to do, which means follow your rules, follow your plan, continue to do what got you successful. So it's absolutely probabilities. Your goal, which is I think a fairly easy goal to accomplish, is to turn those probabilities very much in your favor through understanding charts and through understanding the math and probabilities concepts that I teach, where you have that little moment in time setup like I like to talk about. All right. Any follow-up and any other questions, anybody? As a follow-up to that, Ray, don't let anybody ever tell you anything different. There is no system, there is no software, there is no anything that is going to guarantee you anything. It's all about probability. That's all it is. If there was anything like that, I'd be the first one to use it. I'd be the first one to know about it. There is no such thing. So it's like a whole lot of things in life. You learn it. If you learn it well, you're good at it, and you do well at it. It's no different than being a doctor, lawyer, or anything else, really, in my point of view. Very, very learnable thing. Most people just don't like to learn it. All right. Nobody's typing. Thanks, everybody. We'll see you next time. See you in the room if you're in the room. Have a good night, everybody.